Oh, g'day there, traders and friends. Thank you so much for joining me on this Wednesday afternoon market recap. What I thought I'd do at this particular moment is recap the three US markets, give you an update on what we can expect at least for Thursday and Friday's trading session. I'm also going to tie in what the US dollar is doing at the moment because that has some immediate implications for the movement of the overall market, and then just tie in some individual stocks to recap what, again, we can expect for Thursday and Friday's trading session. Now, if we move into the Dow Jones Industrial Average, you can see we were down close to 30 points. For the majority of the day, actually, we were up. We were in positive territory, but we failed to hold that bottom area of that shaved Morobozu candlestick going back to Tuesday's candlestick, and it's left us with what we call almost, some form of a shooting star, even a gravestone type of candlestick. It's really a candlestick indicating continued selling pressure, but at the same time, we do have what I believe to be a limited downside target across all three of the US indices. I've had this green box drawn on my chart. It's an area where I expect the markets to slow down, if not reverse, and continue the bullish uptrend. So if you look at this picture, you have to say to yourself, is it a good idea to be looking for new aggressive shorts, or should I be waiting on the sidelines at least to sort of wait for additional price action before looking for potential swings when the market and if the market retraces? That is the question which we are trying to answer. The same is true for the S&P 500. You can see we have closed right at the bottom of this box. Now, for those of you who do not know what this green box represents, it's simply a Fibonacci retracement level based off the most recent bullish wave. This has given us our sub-ranges, our 0.382, our 0.5, and our 0.618 retracement levels. This is where we say to ourselves, well, the bulls still have control of the overall market if we hold above this level. Tying in the Nasdaq, again, we are simply coming down and touching that open range, that 0.382 retracement based off this major wave. So technically speaking, we still haven't really inflicted too much technical damage, although the markets have been in some form of a retracement. Over the past week, it's not enough to say, look, this market is going to really sell off, any further into the week. At least I am expecting this market to sort of stabilize around these levels, and then we can analyze the price data on Thursday and Friday and look for applicable swing trades. Now, one picture I do want to reference at the moment is the price of the US dollar. The US dollar, as at Tuesday's daily candle, is what we call a gravestone doji. It's very close to a shooting star, and it's really the end of a blow-off bullish rally. I referenced this in the video on Saturday it was, and I paid a lot of attention, or at least addressed the dollar in very good detail, because there's a very important reason in doing so. The dollar at the moment has been on an absolute tear. Since it broke out in November 2014, it has been taking out resistance after resistance, and it's been in a very, very strong bullish uptrend. At the moment, the dollar is getting a lot of media attention. It has been on a meteoric appreciation. It has appreciated the fastest, I think, in 31 years. So in the past 31 years, the US dollar hasn't appreciated as fast as it has at the current juncture. I find this interesting because we were expecting this to be the final blow-off rally until we see some form of a larger retracement and correction in the US dollar. This candlestick right here is the first indication that we have that we may be starting to move sideways and potentially set up that retracement. The reason why I am mentioning the dollar is because if the dollar does move into a retracement, if it doesn't have the stamina or the momentum to reach and hit that parity level, that 100 cent or that $1 level, then there's a good chance that the dollar is going to act as a stabilizing mechanism for the three US markets. I find it interesting how the US dollar is hitting targets. It's at that final stage of the blow-off rally to the upside, and as such, the US markets appear to be hitting the support levels which we addressed over the weekend in that pro analysis class. In other words, if you're not in shorts at the moment, please do not go out there looking for new swing trades to the downside as at the close on Wednesday afternoon. There is a very good chance, again, this market is going to stabilize around here. It could be even short term, and we may start to see some buying pressure come into the markets. All bets are off the table, however, if we get a movement below 17,564. If this occurs, this is going to be an intermediate trend reversal, and there should be at least movements down to about 17,140. If not, we could even come down and retest the primary trend, which has been in effect since May 2009. Let me just take off this annotations, or take off these annotations and show you what I'm referencing to or referring to. Oh, but I can't do that because of the trend. Let me change to the weekly and show you the level which I'm paying attention to. You can see this red line coming up through here. This is establishing the primary bullish trend. Let me change to a line chart for you. This line right here is what I'm referencing. Now, if we, again, forecast and project this out into the future, it's going to come in line, anywhere just above that 17,000 level. That would be a true correction for the overall market. This would be an incredible buying opportunity, but at the current juncture, this is the best opportunity which we have to start looking at possible long trades. Now, when I bring that into the analysis of our top 13 individual trade list, you can still see that there is a lot of weakness across the board. Apple is late to the party. Really today and yesterday's session, it's really sold off quite considerably, but it hasn't been a good technical swing because it's against the trend of the overall, movement to the upside. Now, again, we can level this Fibonacci retracement box, but I am paying attention to this 50-day exponential moving average. It comes in line very close to the ultimate breakout, which we established in early February, and this could be the buying opportunity, of March at least on Apple, if it gives us the right signals. At the moment, it hasn't, but I'm paying very close attention to Apple, more so bullishly at the moment, as a lot of people are expecting this to continue to the downside. It wouldn't surprise me, to see this stabilize here and then swing to the upside. So I'm paying attention to Apple. Amazon, again, is still dancing around that support level at about $368 a share. Here we are at $366 at the moment. It doesn't look good for the price of Amazon, but this picture can change very, very quickly. And again, it's only a matter of time until we start to see a white candle show up to give the price action a little bit of stability. Baba today, again, moving back down to those old breakout lows. We're down here at about $82 a share. No great swing trade at the moment. We're simply filling this one big white Mariposa candlestick. And over the past 5 trading sessions, we've come back down and we're touching those ultimate lows on Baba. Baidu today sold off quite nicely. It's back down at support here at about $204 a share. Again, it's a tight short if you wanted to start shorting below 200. I'm not doing it. It's not something that I'm looking at, and I wouldn't encourage anyone to do that based on the 3 US markets. Caterpillar, again, has been a pretty decent trade for us. We're down here at $80 or $79.70. Let me try and zoom in and show you this picture. At the moment, if you're in Caterpillar still, such as myself, I'd encourage you to bring your stop down and pretty much place it above the high of Wednesday's candlestick. It's enough, profit to make it worthy. And there's still, a little bit of opportunity being left on the table if it does want to push down into these lower areas. It hasn't made it yet. It tried to do it on Wednesday. We didn't get the commitment. But as such, just lock in profit on this particular trade and let's see what happens. We'll have a look at what the market's doing, how that influences the price of Caterpillar. Let's move into FAS. FAS today had an inside day spinning top. You can see our original entry here at 120.84. A second entry at 116.86. This was a $4 move or a $6.80 day. Today we were up $1.66, but it's just an inside day spinning top. Expect FAS. This is what FAS likes to do, by the way. It likes to sort of hang about inside long day candles. May even give you a big upper wick one potential day, but look at it in the context of a bear flag, which is going to break to the downside. Low volume on today's daily candle compared to the breakout on Tuesday's candle. You can see the volume difference right here, a big volume difference, almost 50% of volume traded today in comparison to Tuesday's candle. I'm still in this particular trade. I haven't sold any of my positions at 120.84. Still a profitable trade. It's still up, $2.40 at the moment. Pretty nice trade. I'm keeping my stop right here. And if the market suggests that I need to lower it or at least exit out of FAS, I will do so immediately, most likely on Thursday's daily candle. All right, let's have a look at Facebook. Facebook is broken down below both of our triggers. 78.40 was the more relaxed entry, aggressive entry at 79.70. If you are in this particular trade, really we want to manage the trade and make sure that at least we can get a risk-free type of trade on this particular swing trade. Now, Facebook is closed below these swing lows. It's in a very bearish type of swing trade at the moment based on this 3-day candlestick right here. And, if Facebook really starts to push below about $77, very good chance that we're going to make it down to $75. If you are in the trade, you've got a couple of options. Do you place your stop above Tuesday's or Wednesday's candlestick? That is the question, which is up to you. You can make the decision on that. Personally, I'm going to keep my stop on Facebook about $79.50 at the moment. I may take some off the table, maybe 50% of my profit or my position if it hits, above the high of Wednesday's candle. and I'll just monitor the position as it moves. You can always exit, by the way, if you want, around, the lows of the candle or at the market on Thursday when it opens, if it opens flat. You can just take your profit when need be if you don't feel comfortable waiting for the support level to break about $77.30. So I thought I'd give you an update on that particular Facebook trade. Google today tried to push up intraday as well. You can see that upper wick, but you can see we closed near the dead lows on Google. Pay attention to that 50 exponential moving average as well. If we break this 20, there's a good chance that we're going to come back down and trade to 545. This will be the old breakout again, but it's going to result in a new swing trade opportunity to the upside. We're not there yet, but or in due course, we will have another trade set up on Google. At the moment, I'm sitting out of this particular stock and letting it sort of fizzle out. GoPro again, down 56 cents from our 39.22 aggressive entry. I'm not in this trade, but I will manage it for you. Place a stop at the high of today's candle, and we'll monitor that GoPro trade. You should have actually been out of this on Tuesday's candle at about 37.37. That was our target, and we hit that. But if you're still in it, there's still opportunity to re-exit at 37.37. Halliburton again today is pushing outside the parameters of that Bollinger Band squeeze. Had an aggressive entry here at 44.48. I did not take the trade. 40.46 is my own personal entry on this particular swing trade. There's just too much support at this level. But we came very close to that $40.80 level. These are two quite bearish candlesticks. We have a gravestone doji and we have a shooting star doji. So pay attention to the price of Halliburton. Place your stop about $42.28 if you are on that trade and let it be. Still some nice price levels down here, about $40 a share on this particular swing trade. Netflix again had a nice inside day. Somewhat of a shooting star candle. The initial stages of buying support at the support level over here, about $435 a share. Not enough to buy yet, but we're starting to build structure. That's the most important part of this swing trade. The oscillators have reset really, really nicely. We're just waiting for a good buying opportunity on Netflix. We may even push a bit lower and come down to 424. Or even down to this open gap. So I wouldn't be shorting Netflix at the moment, and I wouldn't be opening any longs on this particular trade. Needs some more additional price action. Tesla today had a pretty bullish bounce up, $3.42. Stopped out of this at $194.35. Total risk on this particular trade was about $1.50. That's okay. A nice little bounce, moving up into that 10 exponential moving average. Low volume. We could be setting up what we call a bear flag, which is going to break to the downside. At the moment, I can't give you any more information on the Tesla swing trade. We are oversold on the oscillators, but it's not enough to go long because we do have a declining trend line, which is coming in about $206, $205 at the moment. We also have support up here at about $200 a share. So stick tight on Tesla. Target's still at 185.60 if you are in this particular swing trade. At the moment, it's giving us a little bit of bounce to the upside. Twitter at the moment has got a nice little sort of inside day or a bullish counter attack. It is very close to being an inside day. You can't call it that because the outside body, or the real body, was actually down below the open or the close of yesterday's candle. Low volume today in today's trading session. There was no swing trade on Tesla to the downside. The reason why was because of this gap, and at the moment it's sort of just fizzling out at the moment, so there wasn't a true sort of swing trade on this. I think we're going to have an exceptional bullish trade on Tesla maybe next week. I'll give you an update over the weekend, but I am definitely watching Tesla because it's very important to do so when we come back down and retest this old support level. It appears as though traders are already starting to buy at this particular lower wick on Twitter. No real trade update on this particular stock. One stock again which I will reference, and something which I'm keeping very close attention on, is LinkedIn. Now LinkedIn has had two dojis in the past two trading sessions. Now again, the market's been quite bearish. LinkedIn hasn't sold off. And I'm telling you, it's only a matter of time until the stock breaks out. So there's no real information or update which I can give you in the way of data in regards to LinkedIn. Just pay attention to it. There's a very, very good chance that this is going to break out this week. I'd be somewhat surprised if LinkedIn didn't break out this week. So I can't give you an update as at yet. I am waiting for a true price breakout. It is going to be highly volatile when it does occur. Until then, I'm sitting tight and I'm monitoring the daily price action of LinkedIn to at least position yourself nicely in a very good swing trade when this stock breaks out. So that's a nice little Wednesday afternoon market recap again. Just to recap the overall structure of the market, limited downside. We may start to see, a couple of white candles at this particular location. We'll address those when they show up. I do believe the downside short term is limited. We have had quite an exceptional movement to the downside this week. So please do not go out and aggressively look for shorts at the moment. If the market, however, does tank, it is going to move a lot of shorts, which we are looking at, which would be nice, and it'll continue in the swing trade. But just manage risk on those individual trades, and that's the best we can do as technical swing traders. So thank you so much for watching this Wednesday afternoon market recap. Email me success@pivotpoint-trading.com. I'll see you all Thursday afternoon for another market recap. All the best traders around the world. Thank you so much. Goodbye.